I want to kick this episode off with a visual that honestly kind of broke my brain the first time I saw it.
That sounds like the start of either a midlife crisis or a finance TED Talk, mate. What were you looking at?
It was a breakdown based on James Darby's work, The Untold Truth About Money. He does this thing where he actually visualizes wealth. On the screen, he puts up a circle to represent $1 million. You look at it and you think, yeah, okay, that's a nice solid circle. I'd love to have that circle.
For most people, that circle is the finish line, right? That's the big retirement number, the I'm finally done point.
Exactly. That's the goal we're told to grind toward for 40 years. But then he puts another circle on the screen for 10 million. Then another one for 100 million. And then finally, a circle for $1 billion.
And I'm guessing the billionaire circle makes that little 1 million dot look like something you'd flick off your screen.
Pretty much. The $1 billion circle is so massive that the $1 million circle, the thing we sweat and sacrifice for, looks like a pixel, just a speck of dust.
And then you chuck Jeff Bezos on top of it, right?
Yeah. Then he shows Bezos' net worth, which is something like over 100 times that $1 billion circle. And that's when this horrible little feeling hits you in the gut. The feeling that the game is just broken. I'm over here sweating the price of eggs, and there are people operating on a geometric plane I can't even access.
It feels completely rigged. Like you're sprinting on a treadmill, lungs burning, and some other bloke just glides past you in a Ferrari on a private highway.
Totally. And my knee-jerk assumption, and I think a lot of people's, is the guy in the Ferrari either got ridiculously lucky, inherited a diamond mine, or did something dodgy along the way, because there is no way emotionally that he worked 1 billion times harder than I did.
That's the defense mechanism. It's comforting to believe the only way to get there is to be a villain, or to win the jeans and lottery combo.
Exactly. But today we're going to dismantle that a bit. We're not doing toxic hustle here. We're looking at the actual mechanics behind those massive wealth numbers. And spoiler, it's not about working harder or skipping your morning latte.
Good, because if you tell me the big secret is to stop buying coffee, I'm walking out of the shed right now.
No, this is about math, specifically the math of wealth generation that school conveniently forgets to teach. But before we get to the equation, we have to talk about that rigged game feeling. Because if you really believe the game is rigged, you don't even bother to play.
Well, isn't it rigged? I mean, look at movies and TV shows. Every rich character is either a cartoon villain or some clueless, spoiled heir who's never worked a day in their life.
Hollywood absolutely loves that trope. But if you dig into the data, you get a different picture. There's a report from WealthX that looks at the ultra-wealthy, people worth over $30 million.
Serious heavy hitters.
Yeah, and they found that roughly 68% of them are self-made, meaning they didn't inherit some ancient family empire. They built it. Think Oprah Winfrey, who started in extreme poverty. Howard Schultz, the Starbucks guy, grew up in public housing. Even Bezos and Musk, while they weren't destitute, definitely didn't inherit the empires they now run.
68% is way higher than the mental picture most of us have. My brain still goes to, my dad only gave me a small loan of $1 million when I hear self-made.
There's always nuance, but the takeaway is that nearly 7 out of 10 of these folks created their own wealth. So the "it's a lottery, it's impossible" story we tell ourselves starts to fall apart. Wealth isn't random, it's a mechanism.
And if it's a mechanism, you can reverse engineer it, at least in theory.
Exactly. So let's reverse engineer it. Because the mechanism most of us are running is pretty simple. Go to work, get paid, go home, repeat until you're tired or dead.
That's the old equation, the time for money equation. And it feels safe, but it's actually a trap.
Right. The source material calls it the time for money trap. Let's do the math on a very normal scenario. Say you make $20 an hour. You work 40 hours a week. Pretty standard.
I can already feel this getting depressing.
To earn, not save, just earn $1 million total at that rate, it takes you nearly 24 years. And that's assuming no taxes, no rent, no food, no Netflix, just pure income piling up.
So in the real world, if you're saving, say, 10% of your income, that's like a couple of hundred years?
Roughly. In other words, you'll be long gone before you hit that $1 million mark. The flaw is obvious. Your input time is finite. You've only got 24 hours in a day. You physically cannot work enough hours to become truly wealthy if you're just selling time. The ceiling is baked into the math.
So the people at the top are just not playing that game at all. They're not trading time for money the way most of us are.
Exactly. Wealthy people might work hard, but their core equation is different. They realize trading time for money is a losing strategy because you always run out of time first.
Okay, but this is where I get skeptical. We're always told, work smart, not hard. But usually that's just a Pinterest quote. What's the actual equation these people are using? If they're not selling time, what are they selling?
They're selling value. And there's a really useful way of framing this from MJ DeMarco, who the source material leans on a lot. He defines wealth with a simple formula. Wealth equals net profit plus asset value.
Wealth equals net profit plus asset value. All right, let's unpack that before people's eyes glaze over.
Start with net profit. Net profit is just units sold multiplied by unit profit. That's the engine. In a job, your units sold is basically your hours. You might sell, 2,000 hours a year?
And you can't really scale that. You can't wake up and decide, you know what, today I'll work 10,000 hours. The calendar's not that flexible.
Exactly. In a business, though, the units sold could be in the tens of thousands or millions. If you sell a product, you can sell 10,000, 100,000, a million copies. The time cap is removed. That's where scale shows up.
So you either touch millions of people a little bit, which is scale, or you touch a smaller number of people a lot, which is magnitude.
Exactly. The source material has this example that always ruffles feathers. The cleaner versus the accountant.
Because the cleaner is obviously working physically harder, right? They're on their feet all day, lifting, scrubbing, burning way more calories.
Totally. But the market doesn't pay for effort. It pays for perceived value and scarcity. Cleaners are, sadly, seen as easily replaceable because there's a big pool of people who can do that job with little formal training. The perceived value is low.
Whereas an accountant can save a client thousands of dollars on taxes. The magnitude of the problem they solve is much bigger. And there's a higher barrier to entry, degrees, certifications, experience, so the market pays more for each unit of their time.
Right. But here's the twist. Even the accountant is still trapped if they're just billing hours. They're still in the time for money game. They're just playing at a higher hourly rate. DeMarco calls that the slow lane.
So to get into what he calls the fast lane, the Jeff Bezos territory, you need to max out that units sold variable. You need to detach your income from your time.
Exactly. That's where this paradox of wealth comes in. It sounds like a fortune cookie until you think about it. Stop chasing money, chase problems.
Sounds lovely, but if I've got rent due on Friday, I am very practically chasing money.
Of course, in the short term, you need to keep the lights on. But the market, in the long run, doesn't care about your rent. It doesn't care that you want a Ferrari or to retire at 40. The market is selfish. It only cares about what you can do for it.
So if all your mental energy is on, I want to be rich, that's you focused. And the market just shrugs.
Exactly. But if you focus on what problem really sucks for people and how can I fix it, money starts to become a byproduct. Money is just the receipt for value transferred.
So practically, your job is to listen for complaints. I hate this. This is so annoying. I wish this existed. Why is this so complicated? Those are like little flares going up.
Exactly. The source even jokes that when you're wrestling with a fitted sheet and yelling at it, that's a business opportunity. If you can invent a self-folding fitted sheet, you're probably a billionaire overnight.
Note to self, I'm cancelling the rest of my day. I've got some laundry-related R&D to do.
But seriously, look at what Bezos actually did with Amazon. He didn't invent books. He didn't invent shopping. He just fixed the "it's annoying to go to the bookstore and they don't have the book I want" problem. He attacked convenience, selection, and speed on a massive scale using the internet.
He solved a $1 billion friction point and then used code and logistics to scale that solution to pretty much the whole planet.
Exactly. And this is where a lot of small business owners get stuck. They find a problem, they start something, but they just end up creating another job for themselves. The source uses the yoga instructor example.
Right, the classic trap business. You're a great yoga teacher, you start your own studio, you charge, say, $100 an hour. That sounds fantastic compared to minimum wage.
It does, but run the equation. Your units sold are still capped by the hours you can personally teach. If you get sick, income stops. If you go on holiday, income stops. You don't really own a business. You own a job where you're both the boss and the most overworked employee.
And probably the worst boss, because you make yourself work weekends.
Exactly. So how do we apply the wealth equation to that yoga teacher? You look at scale. You digitize, film the class, create a 30-day yoga transformation course, upload it to the internet.
So that 1 hour of effort filming a session can be sold once, or 10,000 times, or 1,000,000 times. And the effort to sell the millionth copy is basically zero.
Yes, the cost of replication trends toward zero. That's infinite scale. That's how you break the link between time and money. You're asleep and someone in another country buys your course. You just made money without spending any new time.
That's the producer versus consumer mindset shift the source talks about. Most of us are trained to be consumers. We see a subscription box and think, ooh, I want that snack box. Instead of thinking, hang on, someone put $5 of treats in a cardboard box and sold it to me for $30. How does that business work?
Exactly. You've got to start looking under the hood of the things you buy and ask, what problem are they solving? How are they acquiring customers? What does the math look like? That's you shifting from consumer to producer in your head, which is the first step before you do it in real life.
So far, we've really hammered the net profit side of the equation, units sold times profit per unit. But there's a second bit you mentioned earlier, asset value. And that's where the really ridiculous numbers tend to live.
Exactly. Asset value is the part so many people ignore, but it's what turns "I make good money" into "I suddenly have generational wealth." It's the exit, the liquidation event. Think about when Facebook bought Instagram for around $1 billion back in the day, when Instagram reportedly had something like 12 employees and basically no revenue.
At the time, everyone said, that's insane. They overpaid massively.
Right, but Facebook wasn't paying for the cash flow then. They were paying for the asset itself, the user base, the attention, the growth, the system.
So wealth isn't just the cash in your pocket from sales. It's the value of the machine you've built that produces those sales.
Exactly. If you own a small yoga studio, maybe you can sell it for 2 or 3 times your annual profit. That's your multiple. But if you own a scalable software platform that's growing fast, someone might pay 10, 20, even 50 times your yearly profit or revenue.
So to make it concrete, if I build a software business that makes $1 million a year in profit, and it's growing and systemized, a bigger company could come along and write a check for, say, $20 million to buy the whole thing.
Exactly. That's the harvest. That's how people jump from middle class to ultra wealthy in a single afternoon. But you can't do that if you are the business. You can't sell you.
If the whole thing falls over when you get the flu, that's not an asset. That's a hostage situation.
Exactly. If the business relies on your face, your time, your personal grind every day, it has very little asset value. To build something sellable, you need systems, processes, software, people. The goal is to build a machine that actually works better when you're not there micromanaging.
And that is a brutal ego check. We love the story that nobody does it like us, that we're indispensable.
Yeah, but if nobody does it like you, you're unsellable. You're trapped in your own creation. You want to become dispensable to your own company. That's when you know you've built a real asset.
So if we zoom right out, the path we've been talking through looks something like this. Step 1, accept that the game isn't completely rigged. There's a mechanism. Step 2, stop thinking in time for money and start thinking in units sold and value per unit. Step 3, use tech, media, systems to scale your solution. Step 4. Build it so it runs without you. Step 5. Maybe one day, sell the whole thing.
That's the roadmap. But the source material makes one more important pivot at the end, because otherwise this all just sounds like how to get rich and buy a yacht. The real question is, what is it all for?
And the answer isn't Ferraris and private jets. It's freedom, autonomy.
Exactly. Money is just a tool to buy back your life. The source compares two kinds of struggle. The safe path, working a job for 40 years, asking permission for holidays, stressing about bills. That's its own kind of struggle. It's slow and chronic.
Versus the entrepreneurial struggle, which is acute. High stress, high risk, sleepless nights, plenty of self-doubt. But it buys you a shot at total freedom on the other side.
Exactly. Both paths are hard, they just hurt in different ways. You're choosing your struggle. And for the record, not everyone needs to build the next Amazon. You can apply this thinking at a smaller scale too.
Even inside a regular job. The source throws out this challenge. Ask yourself, what problems am I solving here? Because if you're just filling a seat, your value is capped.
Yeah, but if you're the person who brings in sales, fixes inefficiencies, creates systems that save time and money, you're increasing your perceived value. That's the micro version of this entire wealth equation. You're increasing the magnitude of the problems you solve.
That's how you negotiate better pay, better conditions, more flexibility. You're moving yourself, even as an employee, a bit closer to that producer mindset.
But the ultimate goal, if you want the giant circle instead of the tiny pixel, is ownership. Owning the solution. Stop renting out your time and start owning the result. That might be a product, a platform, a course, a piece of software, a content library, whatever actually solves a problem at scale.
So the takeaway is, stop chasing money, start chasing solutions. And maybe stop complaining that the game's rigged and start learning the rules it's actually being played by.
The rules are there, they're just written in tiny, fine print. Hopefully today we've bumped the font size up a bit. And if you want to really nerd out on this, the source material strongly recommends MJ DeMarco's work, especially The Millionaire Fastlane. It's basically the textbook on this whole wealth equation and producer mindset.
Highly recommend giving it a read or a listen. It's one of those books that can properly flip your worldview. I'm not saying it'll magically make you rich, but it will change how you think about time, money, and what game you're actually playing.
All right, I think that's a good place to leave it. I'm going to go look for things to complain about in my own life and see if any of them could be turned into solutions instead.
Good luck with that self-folding fitted sheet, mate. If you crack it, I'm buying shares.
Deal. Thanks for hanging out with us on this episode of My First Podcast. We'll catch you in the next one.
See you next time.